about to take the plunge into the property market, probably one of the first things that you're going to want to find the answer to is how much can I borrow? And the biggest challenge with this is most people take the results from the first calculator they find on Google to be gospel, when these calculators aren't necessarily always precise. So today we're going to talk about how to work out how much you can borrow, and we're also going to give you some tips on how to turn the odds in your favour and increase your borrowing power by potentially hundreds of thousands if that's what you're looking to do. Before you start looking at property to buy, you absolutely want to make sure that you have a pre-approval in place. It not only gives you a good indication of what you can actually purchase for, but it puts you on the forefront when you're negotiating with a real estate agent. If you're ready to go with the approval and your offer's accepted, it may mean that you're in a far better position to actually win that property. Asking the question how much I can borrow is important, but it is also important to consider how much you should borrow. Just because you may have a large capacity to borrow a certain amount doesn't necessarily mean that it's suited to your scenario. So there are a lot of buyers in Sydney and Melbourne in particular who are asking the question how much they can borrow, which is understandable. Prices of property here are quite expensive and they just want to be able to get their foot in the door. However, if you look at other areas across Australia, perhaps South Australia, Western Australia, there are situations now where consumers are actually, the value of their property is now less than the loan that they've got against it, so they're in a negative equity situation. So I think we should definitely be asking how much should I borrow, not how much can I borrow. We should also feel very comfortable that in Australia lending is very regulated, so there are a lot of controls in place to help ensure that we don't borrow more than we should be. So at a high level, your borrowing power is calculated by looking at your income and your expenses. The higher your income, the lower your expenses, the greater your borrowing power will be. A common misconception though is that your borrowing power is calculated at say 4% because that's what interest rates are at the moment, when in actual fact it's calculated from anywhere between 7 and 8%. All income isn't considered equally. You've got your casual employment, self-employed, full-time, and it's all looked at differently. If you're casually employed, your borrowing power could be less if you haven't worked as much in the last month. If you're self-employed, there may be things like depreciation or one-off expenses that could affect your borrowing power. People often underestimate their living expenses, and we encourage you to be very thorough when you're making these calculations. If you're going to be buying a property to live in, you don't need to consider rent because you won't be paying that once you've purchased the property. I think it's important to evaluate your expenses. Try and cut down on some of the things that you don't necessarily need. Gym memberships, subscriptions, phone bills. Just reduce any outgoings that you have as much as you possibly can. Depending on your income, having a dependent can reduce your borrowing power significantly. Hypothetical scenario, you've got a couple with a household income of $200,000, credit card limits of $50,000 and about $2,400 a month in expenses. They start off with a borrowing power at about $1 million. If they have one dependent, that reduces to about $940,000, and if they have a second dependent, it goes down to about $875,000. So your deposit size is really important in determining the amount that you're able to purchase for. You can start off with as minimum as a 5% deposit, but to avoid mortgage insurance, you'll need at least 20% of the property's value. Having a bigger deposit doesn't necessarily mean that you can get a bigger loan. However, it may give you more power to negotiate when you're looking at purchasing a property. Reducing your credit card limits. If we were to look at a hypothetical scenario where a couple had a household income of about $90,000 and they were to reduce their credit card limits from $20,000 to zero, they could unlock approximately $87,000 in additional borrowing power. It might seem obvious, but maybe moving into a higher job or asking your boss for a pay rise that you really deserve will absolutely have a benefit to your borrowing power. If you look at a couple with combined income of about $200,000, if one of them were to receive a pay rise of about $20,000, it would increase their borrowing power by about $133,000, so it's quite a large benefit. Taking steps to improve your credit score before applying is really important. There are a number of things that you can do to improve the credit score, and if you'd like to head over and have a look, we have some great articles on that at unihomeloans.com.au. And last but not least, go to the right lender. What different lenders will lend you can vary by up to $100,000. Uno's platform helps with that by bringing the lender borrowing power into the search results that our customers see, so you can easily identify a good match for what you're after. So that wraps up the whole how much can I borrow question. I hope you found it helpful. If you've got any questions, you can leave a comment below. You can subscribe to our YouTube channel, or if you just want to plug some numbers into the calculator, there'll be a link below to our Uno Home Loans Borrowing Power Calculator. Good luck with your search, guys. I hope you found the video helpful.